Hey guys, hope you and the families are doing well. There's three main trading setups that I use on the long side. That's buy stop limit orders in Morellos, which are intraday mean reversion longs, and opening range breakouts, also known as ORBs. So this short YouTube video is going to teach you how I trade buy stop limit orders in Morellos and opening range breakouts. Market Search are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, then you'll find a link to that in the description and the comment section below. So let's get into the video. I'm going to take you through a buy stop limit order in Canadian solar. That's a stock that I was targeting recently this week. I'm going to take you through an in Morello in Rivian, which undercut its 50-day and 65-day EMA. There's the in Morello coming through right there, and then you can see that price level plotted on the daily chart as well. And then I'm going to take you through a 5-minute opening range breakout in Kinross Gold, a precious metal miner from Wednesday the 26th of November. So let me just take you through the buy stop limit order first, and then we'll go into in Morellos and opening range breakout. So the buy stop limit order, if you've read Darvis's books or if you've read Stan Weinstein's book, Secrets for Profiting in a Bull or Bear Market, you'll be familiar with a buy stop limit order. So what a buy stop limit order is, you may see a constructive daily candlestick. So if you followed the channel for a little while, you may you may be familiar with trigger bars, gap down reversal bars, and shakeout demand tails. So I love looking for these trigger bars. They are often tight, low volume inside bars around one or more key daily moving averages. They're going to be the 10-day EMA, 21-day EMA, the 50-day simple period moving average, and the 65-day EMA, most commonly where I'm looking for those type of bars around. I'm also then on the lookout for the likes of shakeout demand tails and gap down reverse bars, like Rivian here on the Friday the 21st of November. That there is a really nice shakeout demand tail right off the 50, and then there's a really nice Morello. I'll take you through that in a little bit. But buy stop limit orders may be better suited to you if you're less active and you can't watch the market because you have work commitments, family commitments, and things like that. Or in Nicholas Darvis's case, he's gallivanting around the world dancing, right? And he's famously using telegrams with his broker. So a buy stop limit order, what you're doing is you're determining ahead of time, okay, if price breaks out, so this is what I call a trigger bar in Canadian solar, okay, leading stock, nice move up here, comes back down, shakes out underneath the 21-day EMA, so you get a shakeout in there, nice strong recovery coming through on there, that's the 24th of November, and then you get this tight, low volume, nearly an inside bar, okay? So with a buy stop limit order, what I'm doing is I'm defining the risk ahead of time as well. I'm saying, okay, so I'm entering the order in, so it's a buy stop limit order. So let me take you through that. So the buy stop price is going to be the high of what I call this trigger bar here. Now that is $25.16. Now to control the risk, again, we can think about all this ahead of time. So it's a not so much more a really active way like opening range breakouts and in Morellos, as you're going to see. You don't have to be watching the screen because you just enter the order. You potentially do it on a good till cancel basis or just for that session. So the buy stop is the high for me of that trigger bar. Okay, this one I'm just going to call this low volume inside day. Now it's not quite an inside day by the looks of it, but 25.16. Then what I'm going to do is place my stop loss a cent below the low of that bar. Now what I then like to do is think about the initial risk relative to the 20-day ADR percentage. So if we do here, this is a very quick stock with a 20-day ADR percentage of 13.62%. That means over the last 20 days, the average daily range of the stock in terms of percentages has been basically 13.5%. If you keep in head the average for the Triple Q and the SPY ETFs over the course of a year is around about 1%. This stock is really, really quick relative to the major indexes. But what I like to do is when I'm thinking about initial risk with buy stop limit orders, I like to keep it ideally somewhere between 1.25% versus the 20-day ADR percentage. You can see here coming in at around 7% off an ADR of 13.62%. It's nearly half, isn't it? Okay, so that's just a nice risk metric. Now you can also attach a limit to the buy stop limit order. Now why would you want to do that? Well, if you don't attach a limit to the buy stop limit order, what could happen is the stock could gap up massively. Okay, and you thought that you were going to get filled at this price, and then the stock gaps up 10%, you get filled at the open. So now what you've got is you get filled on the gap up of 10%, and your stop loss is under the prior session's low. That may mean that you've got a 12-15% stop when potentially you were envisioning you would have a 3-5-6% stop loss on the position. So what the limit does is it helps you define ahead of time how much risk you're willing to take on the position. So for me, when I'm using a buy stop limit order, that'll usually be somewhere between 0.25 to 0.5% above the high of the trigger bar, the shakeout demand tail, or the gap down reverse bar. In this instance here, this would be a trigger bar. So the buy stop price, that's like the trigger price if you like, is 25.16. And then I'm defining ahead of time the maximum amount that I'm willing to pay for any shares. Okay, if we just did it at, let's say, 1% quickly, that would be, so 0.98%, that would be 25.41. Okay, $25.41, and then my stop loss on the position is going to be 23.41. So then I can see, okay, if I get filled at the limit on that buy stop limit order, am I still happy with that risk? If I get filled at the upper range of that limit, am I still happy with how much risk I'm taking with my stop loss on the low of the day for the trigger bar in this instance, relative to the 20-day ADR percentage? There may be times where I go more than 0.25 or 0.5 and potentially up to 1%. Rarely do I ever go over 1%. May depend how much I like the stock. Do I think this is an A+ stock? Do I think it's an A+ setup? And do I think even if I go for 1% in terms of the limit on the buy stop limit order, do I still think that risk is favorable relative to the 20-day ADR percentage and what this stock may be able to do from this setup? There are different things to be thinking about. So if you've read Darvis's book, if you've read Stan Weinstein's book, Secrets for Profiting in a Bull or Bear Market, hopefully you'll be familiar with buy stop limit orders, and that there is just how to think about buy stop limit orders. Again, it means that you don't have to be active staring at your screens. You could be in a meeting on the golf course, you could be with your kids, you could be doing a school run or things like that. You may be asleep if it's time zone as well. So buy stop limit orders, I find an effective order entry method technique for myself. I also then I kind of think about it as a trading toolbox. So I want to have multiple tools within my trading toolbox, and then I want to utilize or use whatever tool I deem is best for the situation. So Immorello's really helped me go anywhere at any time, basically. Like, the Immorello is effectively the Swiss Army knife of my trading toolbox. I know many of you started using the Immorello, you really like the Immorello. So again, that's an acronym for intraday mean reversion long. So if I take you through Rivian, I'm actually just going to go back to, say, the buy stop limit order example, but with Rivian, okay? If we just measure the risk through the high of that bar for Rivian and down to the low. So this is where Immorellos can be effective. Again, it's more of an active way of trading. So you actually have to be watching your screens, okay? But for me, the vast majority of Immorellos that I trade occur in the opening 2 hours of the session, okay? Predominantly you're going to find them in the opening 2 hours. You could also get them in the final hour of the market because there tends to be a directional move into the close. So if there's a directional move to the long side, you can see a lot of Immorellos develop there. Not that many happen over the kind of lunchtime lull, just lunchtime chop, okay? But if we just go with Rivian here, what I've done here in this 7.74% is just marking the high of the bar for Rivian and the low of the bar for Rivian. Now, if you followed the channel for a while, you'd be familiar. This is a shakeout demand tail. So shakeout demand tails for me are variations of hammer candlesticks, Takuri lines, and doji dragonflies, okay? And they just come under the umbrella of what I call a shakeout demand tail. Why? Because it's a shakeout demand tail, right? I'm looking for those around key daily moving averages. However, if we were going to use the buy stop limit order where we are targeting through the high, our stop loss goes a cent underneath the low. If we did that with Rivian, and this doesn't even factor in, potentially we've got, if we kind of add 0.5% to that or so, okay? So let's imagine that we then do the limit and we make that 0.5%, okay? So then we have that range that we're looking to get filled in. That would then be about 8.5% risk. Now the 20-day ADR percentage, 7.25%. And even if you're swing trading, just primarily and only swing trading, I think an 8.5% stop is wide. Like, that's a wide stop loss. I don't think you want to have your average stop anywhere near 8.5%, okay? So then is there another thing that you could be doing? So what you get invariably is Immorellos form in the formation of shakeout demand tails. Like, a shakeout demand tail cannot form without an Immorello. Like, it's entirely logical when you think about it. So the Immorello is somewhat of an early entry in the formation of a shakeout demand tail. Because if you think about Rivian here, let me explain that a little bit, okay? If you think about Rivian here, so obviously this session here, we're just looking at kind of the first 3 hours, so I can keep it dialed in on Rivian here. This is Friday the 21st of November, okay? And hopefully you can see these are then the levels there. So 14.15 is the entry price for the Immorello, 13.94, that's a stop loss placement, cent underneath the low of the day. You can go underneath the low of the 5-minute 6 EMA reclaim candlestick. We'll talk about that in a little bit, okay? But what you have here is Rivian starts the session, gets rejected at the 21-day EMA. So actually starts with a shakeout demand tail, tries to go, hits the 21-day EMA, and then it goes down, 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 and then it forms a V shape like this. So what you'll tend to see with Immorellos is you'll see a V shape or you'll see a U shape. So you're looking for V's, you're looking for U's, okay? And I'm then trying to buy the turn, okay? So the entry with the Immorello is right there. You can see it's lighting up on my Immorello indicator. Just search my name in TradingView. You'll be able to find it, okay? And you get the MACD on the custom settings. So I want it to turn quicker. So I'm using custom settings of 629. 629 on the MACD. I'm not using the standard settings because I want it to turn, and using those settings means there is often a correlation between the MACD turning positive and price reclaiming the 5-minute 6 EMA, and I'm looking for a bullish candlestick to do that. You can see the pop and the volume coming through here, okay? But when Rivian's at the low here, okay, when Rivian's down on its low here, it's not looking like this shakeout demand tail. It's looking like this. You see that ugly bar there for Kinross? That is what Rivian looks like. This big ugly red bar when Rivian is down here on the lows. It doesn't look like this. So you've got to be able to build your mental representations, understand how may stocks look by the close if it was to reverse here. Well, it could then be a big shakeout demand tail, just undercutting the 50-day and the 65-day EMA. So shakeout demand tails don't necessarily, or how's the best way of saying this? The Immorello is an early entry within the formation of a shakeout demand tail. If a shakeout demand tail is going to develop, an Immorello will be there. It has to be there. Because if the stock is going to rally, it has to reclaim its 5-minute 6 EMA. You see the logic? Like, if Rivian from down here underneath the 50-day is going to rally back to high of day and then form a nice shakeout demand tail by the close, well, it's going to have to reclaim the 5-minute 6 EMA, and the MACD is going to have to turn. That always has to be true. You see what I'm saying? So there's always going to be an Immorello if the stock rallies successfully, say back to high of day in this instance. That's why I love this setup, and it just enables me to go anywhere at any time. So if you then take a look at Rivian on the daily chart as well, okay, big move up here, pulls back down into here. Now it's a little bit of nuance here, a little bit of context here too. Rivian at this low here, where we're looking at around about $14 or so, underneath the 50, underneath the 65-day EMA, that's the purple line and the grey line there on my chart, which is taken from the daily chart up here. Look how it's undercutting these recent lows. See that? It's a shakeout. That's why I call it a shakeout demand tail. So not only is it shaking out underneath the 50 and the 65-day EMA, and when this bar here was on the low, it looked like this big ugly bar for Kinross. It's also undercutting the last weeks of lows, the last week of price action. Even more if you want to backdate it here, but you see here how it's trying to hold the 21-day EMA. Traders probably getting it there and there and there, chasing the breakout up here, and then oopsie daisy, shake them out. So when they're all getting shaken out, boom, there's the Immorello. Such a good setup. Now, this is then the pros and cons, and this is why we talk about different tools within the trading toolbox. Because as we were saying, if we were going to use a buy stop limit order here with Rivian, we're looking at about 8.5% risk, realistically. However, going with the Immorello, if we go there and we set our stop at lower day, well then suddenly we have a 1.5% stop. 1.5%. I can try a lot of Immorellos for the amount of risk from a buy stop limit order. Do you see that? However, what I tend to do with my Immorellos more recently is the best ones just go. Like Rivian, great example, okay? They just go like this. You probably experienced it yourself with your own trades. Your best trades, invariably, they just go. Livermore said this 100 years ago. It's still true today, I think. Your best trades don't put you under any pressure. They just start moving immediately in your favor. They just start running. And this is what you'll see with Immorellos, okay? You see a V, where they just go. It comes down like this, boom. It just goes like that with the sound effect, okay? Boom, like that. So in that instance, if you think about, okay, what are the 20% of trades that I take with specifically Immorellos here that make up 80% of the profits? Well, what are the characteristics that you tend to see on the 20% of those Immorellos that make up 80% of the profits? Well, what they do is they do not undercut the vast majority, the low of the 5-minute 6 EMA reclaim candle. So in fact, we don't actually need to go in with a stop at 13.94. The stop can be there at 14.03. So then if we just take a look at the risk here, we're now going in with a sub 1% stop. Sub 1% stop, because that's what the best ones do, relative to an ADR of 7%. So that's how Immorellos can really help you create the asymmetric risk to reward trading opportunities. Now with Immorellos, I really like the 5-minute 21 EMA. I also like the 5-minute 6 EMA, especially if a stock starts getting kind of short-term extended, exceeding its 20-day ADR percentage. Hopefully that gives you a flavor on buy stop limit orders in the Immorellos, and then we'll go to opening range breakouts. So opening range breakouts, and if you're wondering why this 5-minute chart of CSIQ is there, that is the 5-minute chart for that day there. Okay, that's the Wednesday the 26th when the buy stop limit order was triggering. Okay, so that's the buy stop limit order in there. You'd get filled here, kind of ums and ahs, and then goes on a nice trend. But again, if you're kind of swing trading it and you're not paying too much attention to the market, as I said, you're doing other things, family, golf, school run, whatever it may be, okay, work commitments, time zones, you're asleep and all of those things, you're not then too worried about this. Okay, you're just sitting and then you're looking to nail a much bigger trend like this. Ride the 10-day, maybe low day if it gets extended, maybe ride the 21, depends on the character of stock. Let's go through ORBs. Okay, so I wrote an indicator on TradingView to help highlight better ORB potential opportunities. So you can see I've done it with the Immorello, and I've done it here with the ORB. They're free to use. The source code is open source as well. Did I say that right? The code is open source. There you go. So 5-minute ORBs. Well, what I'm looking for with an ORB is I'm looking for a really strong candlestick on that 5-minute, and ideally I want to see group theme confirmation as well. So if you go and look at other precious metal miners from this session, okay, you will see that there was some really strong action. If I just ping up GDX here, okay, just as GDX, the gold miner ETF, also going green on that 5-minute ORB indicator. Okay, precious metal miners, a lot of strength on Wednesday session. So let's just go back to KGC a second. So what I'm looking for here is group theme confirmation. So in the majority of cases when I take ORBs, I want one, the stock to look like KGC looks. I want a widespread relative candlestick that opens near the low, closes near the high of the bar, indicating strength. I don't want to see weakness on an opening range breakout. Okay, I don't want to see, say, this bar here for an ORB on CSIQ. I'm not looking for that. I'm looking for that. And then ideally, when I look at Kinross, I look at GDX and I go, look at that. That's ORB in as well. Then I go and look at, say, AGI, Newmont, Barrick, whatever it may be, Heckler, First Majestic Silver, Pan American Silver, some of the silver mine. What are they doing? Are they powering out? Okay, that's what I want to see. So I'm looking for one, the stock to look like this, exhibit these characteristics, really strong, 5-minute opening range bar, open near the low, close really strong. As you can see with Kinross get open on the low, close really strong. The volume doesn't need to be mega, as you can see. With Kinross Gold here, it's only 1.1 times the 20-day look back relative volume. So it's about average for the relative volume on the opening 5-minute candlestick versus the last 20 sessions. I don't think you need huge volume. I put much greater emphasis on the price action. And actually, when you do get really big volume coming through, oftentimes that means the risk versus reward is getting really skewed, like relative to the 20-day ADR percentage. So I don't think you need huge volume on ORBs like this. Kinross, an example of that from Wednesday, the most recent session in the market. Okay, so just to kind of highlight that, my ADHD brain went ping, ping, ping. There, I'm looking for one with ORBs. One, a strong 5-minute opening range bar, open near the low, close strong. I'm looking for two, group theme confirmation. So if it's precious metal mine, I'm then looking at the other ones. Are they strong? And then three, I'm looking for the stock, the group or theme to then be showing relative strength on an intraday basis versus the major indexes. So for me, trading US stocks, that's either going to be the NASDAQ 100 or the S&P 500. Depends on the stock. If it's a more tech orientated stock, I'm going to be giving more weight to the triple Qs because that's obviously more tech based, being the NASDAQ 100. But if it's more of a general kind of stock or a commodity stock like Kinross Gold, I'm going to look at that relative to the SPY. So I'm looking for the stock to be strong, going green on my 5-minute ORB indicator, the group theme to be strong as well, preferably ORBing too, and then for the stock, for the group and or theme to be showing intraday relative strength versus the major index, whichever is the most applicable. In terms of then the charts, on the daily chart for ORBs as well, I prefer ORBs when the stock is above all key daily moving averages. For me, I just then find the subsequent trade management easier as well. If I want to manage it intraday, if I want to manage it as a swing trade, you start taking ORBs where it's below key daily moving averages, I can get kind of choppy and messy. But if you go and study stocks, when they're making their biggest moves, they are above all key daily moving averages. Look at Kinross. See here? It's essentially above its 10-day EMA for probably 90-95% of the time in here. This one I want to be involved in a stock. Not so much down here where it's chopping around underneath key daily moving averages. Again, here, this is where I want to be involved in the stock. This is where I want to be when it's kind of chopping around in here. Not really, not with ORBs. In Morellos, don't mind it. Like that with Rivian, okay? Don't mind that. But with ORBs, generally speaking, I want to be above all key daily moving averages or when it's powering through. And an example of that would be Monday the 24th of November, where Kinross Gold is powering through, reclaim the 21, reclaim the 10-day EMA. But for me, with those three kind of order entry method techniques and or strategies with Morellos and opening range breakouts, and then the buy stop limit order as an order entry method technique, for me that just means it's very versatile, like tools within the trading toolbox. Okay, I don't just want to be the trader with a hammer. I want to have a Swiss Army knife, I want to have a hammer, I want to have a spanner, I want to have a flathead screwdriver, a Phillips head screwdriver, I want to have a wrench, I want to have all the tools, right? I want to have numerous tools, so then when I see opportunities present that I think are A+, based on my criteria, based on my strategy, based on my setup, I have the applicable tools to use in that situation. So that's what I'd really encourage you to do. Start developing a trading toolbox rather than potentially just being the trader with a hammer. So I'll wrap it up there, guys. Hopefully that was useful for you to learn a little bit more about buy stop limit orders, Morellos, and opening range breakouts. Thank you very much for watching. And as always, I look forward to seeing you in a future video.